Hey, good afternoon, everyone. Good afternoon, good afternoon. Good to see you all today. Welcome to the PivotBoss Monthly Market Outlook for February 2018. Today is Thursday, February 1st, 2018. Thank you all for being here this afternoon. Quite an active market we've seen here throughout the week. We've been straight up throughout the first part of the new year here. We finally got a little bit of a pullback here to deal with, and the pullback, depending upon the sector or the industry, varies in severity. There's some that are just not pulling back too much. There's others that have had some wide pullbacks, and we'll try to decipher which ones are good for buying and continuing the overall uptrending behavior, and which ones are good to buy to look to kind of defend and return it back toward recent highs and perhaps trade a range-bound type of strategy. But there's a whole lot of candidates here to look at today, so I'm going to go ahead and get started with looking at some of the futures here in a moment. But first, I wanted to show something quickly here at PivotBoss.com. If you go to PivotBoss.com, right here, get the latest news about the upcoming release of Swing Trade Pro 2.0. Get on the list. If you click that link there, there'll be a little form there where you can jump on that email list so you can be notified about the upcoming news regarding Swing Trade Pro 2.0. This is something that I've been talking about for the last couple of months now, and it's about to be released here pretty soon. So it's going to be something that every person is going to want to be a part of. It's a fantastic training that's really gets to the root of kind of providing a blueprint for how to engage certain types of trades on a swing basis, where to get in, where to defend, how to do all these various things, and it kind of gives a cleaner blueprint to how I engage the market here so that everybody can kind of get the updated training. Swing Trade Pro Part 1 was a fantastic success, and it still is talked about by traders all over. I get emails consistently about Swing Trade Pro 2.0 is going to be even better, so looking forward to having that out. All right, now taking a look at the ES here, I'm going to look through some of the futures contracts right now, talk about some of the key things that I see developing. We'll look at some stocks as well. If you have any candidates or anything that you want me to take a look at, I'll be happy to take some requests and look at those as well. So first of all, number one, the ES has been very, very bullish here to start the year. You can see overall it's just been increasingly bullish over time. This is the last year. This is a one-year look back. One thing you'll notice about this is that the trend continues to get even stronger. The intensity continues to increase. Time after time after time, this thing is getting more and more sloped. And we know that this cannot continue at this pace, but at the same time, it is what it is right now. The market is what it is. You got to continue to do those things that you should do in a bullish trending market, while also keeping an eye on when price fails to see further expansion, those types of things. So right now we're in an uptrending market, very, very strong. We've had our first significant pullback, and this little pullback here, while I call it significant is a relative term compared to what we've seen backward here. We really haven't seen a whole lot of pullback to begin with, but this is decent. We haven't quite gotten to the 21 period pivot-based EMA. We are below the 8 period for the first time all year long, and that could provide a decent buying opportunity for a move higher. What I've talked about in the trading room and in the pre-market reports is to watch 2840. Watch 2840. That's going to be the level here where if a stop run day occurs, it's going to be through that level, and it's going to spark a pretty quick move back toward highs. If price can't get above 2840 and find acceptance, so say that's the key level right here. Say price pops above 2840 and then drops back below closing here. You know, that might signal another big wave down. And I talked about earlier as 2760 perhaps being that target on the way down. Now, in terms of the ES here, one thing to keep in mind, and with all of these, we've been in strong trending markets. So you can see right here, basically, month over month has had a higher value relationship with the pivot range, month over month. And every month, it offers an opportunity to defend the pivot range for another rotation higher. Defend and rotate, defend and rotate. And so today, basically the low of the day was the top of the pivot range. Doesn't mean we can't drop a little bit lower and drop down to here, but overall, this right here is a big area of support, especially in a bullish trending market. And so overall, the idea is to defend a pullback still until proven otherwise. Now here's one thing to consider, and I'm talking a little bit longer about the ES than I will maybe on the others, because this kind of analysis will apply to some of these others as well. After you see an aggressive trending move like we've seen here, there is a tendency to establish a range at highs and kind of digest that recent move over time. And then we will see perhaps a continuation. So we don't necessarily have to take off. The market can just pause and capture its breath a little bit, regain its composure, and then see another round of strength. But we'll see how it plays out. Overall, 2840 is going to be very, very important. And this still provides great opportunities here to see this thing pull back and bounce. Again, this market still is what it is. It's a bullish trending atmosphere. And many of these strong stocks that have maintained their market structure continue to see great bounces. But again, this isn't something that will just continue to occur over and over. You're not going to see another move like this again right here. The next move might be a quick move. Maybe it holds. We'll see how it plays out. The NQ. Now the NQ hasn't had as much of a pullback as the ES. This one has kind of held sideways. I mentioned this pre-market as well. If you look at this 1, 2, 3, 4, 5, 6, 7, 8 days of sideways action. 8 days of sideways. And after you see an aggressive move, like what we saw to start the new year, there's a tendency to establish a range, and you start to see modest higher highs, modest lower lows, and you start to see this type of action as it builds out and again establishes a range perhaps ahead of the next major squeeze. So that's kind of what happened down here, and then we got going. We could be doing that again. So again, this is something to keep an eye on. This LVN is very strong. 6,900 is strong. 7,000 is a key level here to watch. But this could dip down into this trigger zone down here between the two moving averages and into the pivot range and still provide a great bounce. So I'm not convinced that we're done going down just yet. We still might get another round. It really depends on what happens when it tries to get going to the upside. Does it fail? Is there a failure to establish acceptance above 2840 in the ES? Those types of things will be concerning if it does, because I'm not convinced that we're done yet. We could see another little bit more of a pullback before it goes. Now, if we look at the ES, one thing to keep in mind here, this is something I talked about to the trading room this morning. If we take a look at the 5-day range average, this is what I'm usually looking at. The 5-day range average has been quite big for the ES. Right now, if you look over here on a 5-day range basis, it's over here. It's about 75 points per day. If you look over here, day over day, we've been averaging 27 points per day on a 10-day basis, 30 points on a 5-day basis. Today we got 27.75. That's pretty big. To be 27, 30 points per day, that's not like what we've seen in a while. And if you look at this over here, the 5-day range average is high too. So basically a 5-day rolling average, very, very high, where the norm is now way up here. This is the norm right now. So let me open this up so you can see it a little better here. Let's bring this one up a little bit. I'm gonna bring this one up like that. So if you look at this chart here, this is 1 year look back, just 1 year. Right now, all these gray bars right here reflect current data, and so this is where currently, and these blue bars, this is current volatility on a 5-day range basis. Usually, when price gets up that high, it is unusual volatility. The point is, the market has made unusual high volatility ranges the norm right now. And that's not usually sustainable. Usually when a market goes up and sustains a period of high volatility for a while, it will rotate back down and go back to lower volatility. And then it rotates. So that's why you see the rotate up and down, then up and down, then up and down. Right now we are on a sustained upcycle. We haven't come down yet off that range, but maybe that's what we're about to see as we head into February. Maybe we have rallied way too much to start the new year, and this is on the heels of closing the year strong, that maybe in February we start to see this turn down again, which means we have smaller ranges day over day, and that's probably because we're in here doing something like this for a little while. So again, we may see a little bit more pullback and sideways action, more so than we might just jump off and take off to new highs and go crazy again. Because look at this. This is too aggressive here. And when you have a move that's way more aggressive than average, you tend to have a holding phase. So given the sustained high cycle of volatility here that we've seen, we could see a period of development up here at these highs before we see further strength. Now that's going to provide some excellent opportunities, because if that occurs, say we do build out, right, every single one of these tests down here will be very important, because eventually that will lead to the one that leads to a major continuation down the road. You know, it's one of these before it does that. You know, it's this little move here before it does that. So this is going to be interesting to see how this one continues to develop as we head into February. I think these are still very bullish. You just have to consider that we've gone a long way very quickly, so sometimes that means that we might hold early in February more so than rally. Now, if you look at RTY, RTY is one to watch, because RTY has had a significant pullback. This is a really good strong pullback. 1620 on a high, 1565 on a pullback low. We've had great rhythm and movement in this market. Overall, this one's had an uptrending structure along with the PIMAs as well. So there, it's inside the trigger zone. Last time it was in there, it bounced here, bounced here, bounced. And in here it was more sideways, but still showing some bounce. So again, this one is one where it's holding the top of the key range. That's 1554. It's gotten a great pullback right to the trigger zone. And this could provide the next lift to new highs. Now, the one target that we in the room are looking for to being reached is that 1655 up above. That's the 100% expansion target from this key range right here. You got a sharp low, impulse rally, pull back to the mid, trade in the upper distribution, broke to the top and got the 50 real quick. Nice strong pullback. This one could provide a move into 1655. So 1655 is the next major upside target. From current levels of 82, that is quite a move. That's going to be 70 handles of upside. So this is going to be one to watch. You can see a signal here. Typically speaking, in an uptrending market, a pullback with a signal is a good buy. Usually speaking, in an uptrending market. So we'll see how this one plays out. But again, this is RTY. And RTY here could provide some nice bounce potential. GC is one that could squeeze here very soon as well. It already looks like it's in the process of squeezing. In the trading room today and pre-market, I mentioned, you know, I've been waning on this one here over the last couple of days, but for the most part, it's held and it's built some energy. I think there's one more shot at a squeeze here. And what I mentioned to the room this morning, based on our calculations here, based off how these things tend to go, if we get an upside break here, and we can get that break through these highs, 55 is the one to watch, 55. Now it's over here, these highs, 55. If we can push through 55, the breakout day could be somewhere between 28 and 30 points of range. The way I calculated that was by using the 3-day range average here, because this could be like a 3-day squeeze. So if we go down to make this 3 days and click OK, Say we start to squeeze tomorrow, boom. Right there, we're likely going to get that red dot. That red dot is 28.9 points, basically 29 points. That's the dot you have to hit in order to get one of those expansion days. A day like that, a day like that. So if we get one of those expansion days tomorrow, it could be a 28 to 30 point rally type of day where the midpoint is at the breakout point of the day. But that might not be the top. We might then see at least one more day after that where we try to tag that 1375. So 1375 is right here. Boom. Once we get to that level, I'd be cautious. You got to be cautious and see what happens, because let me look at this thing from a higher time frame. So if we come over here, I'm going to take off this. I'm going to bring up the weekly. All right, let's look at the 10-year weekly. You'll see here why 1375 is just a tough go. That's 1375 right there. And so basically 2017 can't do it, 2016 can't do it, 2015 nowhere near it, 2014 smackdown, and 2013 is when the change of bias occurred. So we really haven't traded up here and tested 1375 since 2013, 2014. Long time coming. But look at the overall rounded bottom. That's something that's very interesting. The overall rounded bottom of gold, with 1375 being the level, if and when this thing decides to start pushing through 1375, we might have a major recovery on our hands. I don't know if that's anytime soon. We could still trade it, throughout the rest of the year in this range before we decide to go. So that's not a question that we may have to answer now. But this is incredible here with gold. It's been a great mover over the last year plus, last 2 years, and it's going to continue to show some great movement here. But this is only the beginning. It could become very, very significant once a real breakout starts to occur. So I think right now we're good for one more squeeze up. One more squeeze to the upside targets based off of today's low. So if you use the monthly low there and we say, okay, based off today's low, where is the target? The target becomes this range up here. That's 1385 to 1399, basically 1400. That's way out there. So it's gonna. I don't know if we do that again, because 1375 is such a big level, but anything can happen. I always got to say that everything can happen. So right here, I think we got one good shot to at least see this zone here, and we'll keep an eye on this one. So that's gold right there. Who wants to look at some Bitcoin here? Bitcoin's had quite a day. Big time rotation to new lows. 84.60 is a big push to new lows. It's funny. I did a speaking engagement the other evening with the American Association of Individual Investors here in the Austin area, and a great group, packed house. People drove from hours and hours away from complete different cities. It's just incredible what folks did. And the very last thing we looked at was Bitcoin. And when I mentioned to them that there's a very strong possibility that we could drop towards 6,700, the deflated faces you saw in the crowd spoke volumes. I mean, there's just a lot of folks that didn't really see it coming right away. As a matter of fact, when we were first looking at it, this looked like a strong impulse range, and it looked like there was a major defense occurring here, and that could have easily done this. But instead, on failure after failure here, we knew that this thing was waning, and we mentioned at that time, back here, that this thing could be headed to 6,700. And then, of course, we got the big move to 9K first, which was that's the medium target. And then we've pulled back and have been unable to see acceptance through this LVN. That low volume node is resistance. People are selling that. And so that's why I mentioned this morning pre-market right there. That's the previous month's low. We're at a decision point in the market. The market is now below the previous month's low. Is it going to drive and see further price discovery to the downside, or are you going to reject? And so we're at a good spot here. If bulls are looking for a fresh long opportunity, it would be somewhere in this zone. But again, this is fighting an uphill battle. This is a 2-month lower value relationship. So even if we did bounce, there would be hard resistance up here, hard. And if you look up here with the moving averages sloping downward, PIMA trigger zone, hard resistance. LVN, hard resistance. Trying to reestablish acceptance above this key range low, hard resistance. So even if we bounced, there is an uphill battle for this one. It's just getting, it's a slow, painful death right now. And it could get down even lower. 6,700 is the next on the books here. Now, in terms of how far lower do we go than there, I know we talked about this at the beginning of the year. We talked about this key range and how it's incredible that we have this key range to play off of. And, you know, this was Dow prices at one point, 20,500. It's like the Dow almost. And yet there was a 10,000 or 9,000 handle key range, which means if we broke to the upside, 29,700 was the 100% target. If we broke to the downside, it would be 2,100. Well, right now we're going this way, and it's going to be incredible if Bitcoin ends up being 2,100 bucks, because that's, you know, what Ethereum is at 1,000 right now. I mean, it's making its move and coiling up. That one could be making a move toward 2K at some point. So that would just be incredible. It would be incredible to see how this plays out. But I think overall, this thing is still leaning lower. You still have more downside towards 6,700 ahead. The only thing, the saving grace here would be above 12,000. But really, it's above 13,000. That's the real level. So it's just not looking good right now for Bitcoin, folks. Here's the YM. YM got a great little pullback. Nice little pullback here. A great little tail here below 2-day lows. This one's been extremely bullish. You can see right here this pullback. Great pullback. Now here's the one thing about pullbacks like this is that they're not always perfect one-time pullbacks and go. Again, just like that 2840, we got to watch the 26,300 levels right there, because above that zone we'll start to squeeze. But if it fails, if price gets above that zone and fails, we're going another leg down. This is only one leg, and then we're going to hit something like 25,600, and then we may bounce back toward the mid, and now we have ourselves a key range that we can do some business on. So this one is really nice. Again, it's been super aggressively bullish, so I would not just think it's going to turn around and just go full on to the upside right away. After doing that, I think after doing that, we're somewhere going to do something between this and perhaps, you know, some type of sideways here. So I think there might be a little bit more digestion up here, but with a firm upside bias still, until proven otherwise. Until we break through an LVN, this thing is still going up. And look, we're here testing the pivot range yet again. Two-month higher value relationship. Great strength out of that one. All right, let's take a look at some stocks. We've had a lot of buy candidates on and off the list here over the first month of trading. One of the first ones we looked at last month was CBOE. So on January 3rd, when we did the monthly market outlook, CBOE was our idea. This was our best candidate, and basically the idea here was this was the rejection day. That's the day we did our market outlook. The idea here was that we would likely get going up here toward 32, 34, and you can see it did that and much more, rallying as high as 138.54. Just a crazy rally. Now remember, what gave us a lot of conviction on this one, if I double click this and ask to see all of the periods, it'll show me the pivot range and the PivotBoss pivots for last month. So here it is. So this is last month. That's the day we got together for this session. Look at the tail below the previous month's low. Look at the size of that day's range. The rejection all the way back up, and then it just lifted off and took off. So again, a lot of great rejection at that zone, and that's really what you want to see when you're judging these. We saw it again over here, and we saw the bounce. This was very similar to the bounce over here, a great bounce, and now we're in that zone again. Look at this right here. We're doing it again, where we've pulled back, held a couple of days, and now we saw a bit of a stop run day today. If this one can continue to hold short term 135 tomorrow, this one's got a shot to rally up toward 142 to 144 over the course of the next 2 to 3 weeks. So this one's been looking good as well, and it's lining up yet again. Again, on the short term, holding 135 opens up a 141, 142 target very, very quickly. Again, if we get a double dip pullback in the market, then this LVN is the big one to watch. Just maintaining acceptance there should get this thing going overall, if you want to be patient on that one. Win was another one we saw last month. It was on this day right here. Great uptrending market. I mentioned that this one still needed a few more days to kind of develop, but at some point it was likely going to make a move to about 180 to 185, I think I said. And man, oh man, did this one just blow through that estimate, rallied and topped 200 for the first time. Big time mover. Obviously this one got decimated by news, allegations against Steve Wynn, so that one made it toast after all. But this one was a double move beyond where we gave our estimates. So on this day we were talking about a target estimate zone somewhere about here, and it blew way through that, almost getting into 205. So just a significant mover out of that one. Some of the other ones we've seen here are EC. This wasn't on that day, but we had the pullback in our trading room on this day and got to a nice new high. Today is showing another opportunity. So here's another opportunity in EC where we've pulled back, shallow pullback in a strong high intensity trend. We got a run through multiple day highs here. So price pushed through 3 days worth of highs. And now if price can maintain acceptance basically above the lows, 1920 or so, we could be looking at further upside price discovery toward 22 on this one. So another one here that's offering a buy opportunity on this pullback. Dollar Tree is another one that's had a great trending environment. I mean, look at it over the last 6-8 months. This thing has been trending strong up. And again, one of my favorite things to do is look for this trigger zone right there. And boom, right? You see that move into that little zone, and boom. And here we are again. Here we are again. You see that signal, you see this signal, and you see this signal. Right? And they all have one thing in common. They're all in the trigger zone. The other thing, they're all at the pivot range. This one's at the pivot range, just above it. This one's at the pivot range, and this one is also at the pivot range. Very, very strong. So again, this is another one that could be looking at a nice swing high here pretty soon, and that swing high could take you quickly. Again, based on average here, quickly it could take you up to about 120, 178, or as low as that 119.27. So that's Dollar Tree. Let's see, what else do we have here that I was looking at? Oh, let's see. I was looking at BP just before we jumped on. BP here, very strong trending market as well. Pulled back into the trigger zone yesterday and today started to run already. So this one is already running a little bit, but the goal here would be getting this back up to 45 to 46. Not a whole lot of points in the move, but if it can hold 43s here on a pullback tomorrow, that could provide a little bit of a move up. You do got to be careful here with earnings coming up on this one, but this one could have a run up into earnings, and then you could look to sell it just ahead of the announcement there. So earnings on this one 2.6, you could see a bump right into that zone. Here's HSIC. This one looks like a pretty solid little opportunity here as well. We've had a little bit of a uptrending market here, a soft uptrend, but it's a market structure change of direction. We had been in a strong downtrend, and then right here, price could not make another new low and mark lower. Instead, it broke market trend structure and then came back, held the low, and bounced hard again. And now this is a strong pullback yet again, but it's testing the PIMAs on a change of bias, and it continues to hold above that market structure level here. So this one looks poised for at least a retest of highs, which would put you at about 80. Right now we closed at 75.28. At least a retest of highs, and at most you start to push up into the primary target zone, which is 83.53 to 81.10. So HSIC, another good one to take a look at. I was also looking at VFC earlier. VFC was doing a good job of showing rejection early in the day. I'm talking in the first hour or so of the day, we were already seeing good signs of rejection. Here it is. That's the first hourly bar. Drops down and pops right back up and holds the rest of the day. That's really strong. So if you look at the daily time frame, again, great clean uptrending structure. Here, let's do this. Great clean uptrending structure. Look how nice this market moves as well. VFC, and it's nice and fluid. Pulls back, nice and fluid. Little hold, fluid. Pull back, fluidity. This little hold period and just starts to run. So this one has a lot of great trending behavior, great fluidity behind its movement. Retesting the trigger zone here in an uptrending environment along with that LVN, all of that suggests more strength. Additionally, it's hitting the pivot range and the trigger zone at the same time, and that right there again suggests more highs. Now with this one, the average range would take you between 184 and 185, 183 half and 185. But this one looks solid. I mean, it may go sideways another week or two, but I think it would build enough energy to get you likely up toward that 90. So I think this has a good shot to get even toward 90. VFC does. So this one's a strong candidate here to watch out for as we head into February. And T-Row as well. This is T-Row price. Another strong trending candidate. You can see here this one pulled back right in the trigger zone. It's 2 days. It's held in there. It's closed below the top of the PIMAs there. 3 days now. So this one is building a little bit of energy. Again, this one might go sideways a little bit. That's the personality of this stock. The personality: rally, hold, rally, hold, rally, hold, rally. This is the pullback. We might see the hold, and then we might see it go. So again, this could be the pullback low or very near it, 110s. And if you factor in some holding period, you know, you might want to put this one out a little bit farther out in terms of when it might hit its targets. But a little holding period and a go might get you going up toward 125, maybe even as high as 130 2 months from now. So T-Row price one to watch as well. We've had a lot of great movers though. A lot of great movers here recently. A lot that were short-term movers like this AAPL. This was a great short-term move. You can see right here a nice rejection after it broke through the top of a range, pulled back to the trigger zone, gave us a hold off the midpoint, absorption, stop run day, right to the primary trigger zone, target zone rather. So we got a nice little move here from that low right into the primary target zone. Many of them look that way. Here's BABA. So you can see another rejection, another absorption. From that low, it rallies right to the primary target zone. Just a great little move. AMJ has pulled back and is holding the midpoint of that long candle day there. This one might end up being a sideways type of development here. Oh, I wanted to talk a little bit about PayPal here. PayPal's been in a great uptrending structure. Ever since it got above 45s a long while back, it's almost made a double, right? For so long it couldn't do any acceptance above 40, 42, 45, and then finally right here it gaps through 45 and just runs, makes a run for it. Gaps up again through 56 and just makes a run through it. And all of this has led to where we are now, which is we're starting to see quite a bit of volatility. We've seen a big pullback. That's given us a nice key range. Based off of this key range, the 100% upside target would put us at 90.17. 90 would be a perfect double from that 95 breakout point. And on this pullback here is where we have to see when, does price find that low? Does it find a rejection point? Because if so, we could be looking at a move that takes us up toward 90. And again, so you see this move right here. That's very similar to what we're seeing here. That built out a little bit inside this range and then gave us the squeeze. We might see the same type of thing happen out of this one here pretty soon. So keep an eye on PayPal. And the last one here I wanted to show was one sell candidate. I might as well show one sell candidate, right? Those were all buy candidates. This is your one sell candidate right now. And again, in this market, you have to be very, very careful. But this is MasterCard. This is earnings. And so earnings is out. Look at this strong low right here. That was a strong reversal low. And price never came back to that low. It kept going. And then today, it gave us an equal and opposite strong high. Very strong low, very strong high. Like I usually say, that's an exclamation point. That's an exclamation point. They both punctuate the ends of moves. This one punctuated the end of this move. This one is punctuating the end of this move. So if I had to bet right now, I would bet that this is the high, 176.72, and that we're likely about to see a swing move in the opposite direction to take out these lows. And then perhaps that could get us swinging back up, and now we have ourselves a range, and now we will build out at these highs from, say, 165 to 176. So I think that's kind of what's in effect that could be happening right now. We'll keep an eye on how this plays out, but this is a strong pivot high right here, a strong high. You got a gap fill down below. You have the pivot range here. You have a reversion to the mean trade here. So I think from where we currently are, we might see a good likelihood that we get 165s. And then from there, it may bounce back up and build out a range. So this is one to watch for some short-term weakness here at some point. I wonder, based on this massive move, I mean, I wouldn't normally do an impulse move, but just imagine if this is your impulse low, that's your impulse high, your midpoint's somewhere in here. Yeah, so that would be incredible, but I don't know if we get that type of move. But this is a strong high. The other thing that I find very interesting, last point here, this day right here had a range of 10.4 points. No, that's a 5-day range. I think it's 5.7 points. This day had a range of 5.71 points. $5.71 points. $5.71 of range here. This day over here also had $5.71 of range. Isn't that wild? So I'm looking at this bar right here, and you can read the blue that comes in. Basically, the blue says 571. Over here, it also says 571. That's just very coincidental. But anyways, nice little top here that could be forming short term. Here's what Visa would look like. If there's any lower high here, that could corroborate that as well. Very nice. Well, if anyone has any suggestions or anybody has anything you want me to check out, please let me know. I'll do it now. I know we've checked out a whole lot. We've covered a ton of stocks and futures. Here's one I didn't mention earlier. This is Shopify. And Shopify right now with the rejection, higher high rejection. The other thing you'll notice, that's the previous month's high. So it's already higher high rejection. Strong day. This is the midpoint and this is the previous month's low. So from the previous month's low all the way up was a straight up move in Shopify. Just straight up. Now we have a higher high rejection. This is way too far away to think that we're going to do that. If we're going to reject the previous high, we usually go back to the previous close. But it's rejecting both of them in the same bar. So if you're going to reject both, you usually go back to the previous low. But again, this is such a wide distance, you wouldn't normally think it's going to do that. So instead, I think this is a high probability, this is a high probability target right there, 116. That is the midpoint. That's the midpoint between these 2 points. And if you reject here, you got a good shot to bring it back toward that zone right there. So this is another one here. I forgot to mention that earlier because I didn't have it in the box there, but here it is. Now check this out. If I take a look at the monthly bear targets, click OK. Now from that pivot high, if we pretend that the high of the day today, 131.16, is going to be the high, we can project downward average range targets over the last month. This is an average range over the last 10 months. From there to there would be an average range monthly move. This is your primary 75% target. And right now, based on rejection of the previous high, previous close, the midpoint would be right between those two. So that's your high probability target zone, is between 111 and 116. And at the very least, again, we get a pullback to that zone, and then perhaps we could see some range. But again, remember, we're in an uptrending environment. So if you do a strategy like this, you got to do it really, really, you have to do it with risk in mind. You have to be mindful of the fact that you're counter trend trading. But there's many more ways than just selling Shopify, right? You can do any number of option strategies that allow you to minimize that risk. So there's many ways you can do this as well. So keep that in mind. In terms of YM, yeah, let's look at YM. We talked about YM just a little bit ago. The level I mentioned here on this pullback, it's been a higher value relationship. So we tested the pivot range today. Ideally, that leads to another round of strength. So that's the primary idea right now, is this pullback is still great for a bounce. The level that needs to be, that price needs to get above, is 26.3. That's a point where you could start getting that stop run day. But if there's any failure of prices above 26.3, we could be looking at one more dip down. This might not be it. You know, we might see another dip down. This was such an aggressive move that you might need a little bit more. So I'm not convinced that this is the low just yet, but it's a good serviceable low if it is going to be the low, right? Above 26,300 sparks that move. I think as long as price remains, basically above 25.6, or in this general zone right here, I think there's still more upside. So in terms of the YM and some of these, all of these really, types of markets right now is great pullbacks with a shot to see strength higher. But I wouldn't be surprised if they built out a little bit first and then started to make the move. In terms of the upside targets based off of the current low, we have 27,000 to 27.4 as a measured move from this low. What was the question about the market profile? This one I think is not monthly. This one is a composite. So that you're asking about what profile this is showing, it's a composite yearly in this case. This is a yearly, so it's looking at the last year and providing a composite profile. Some of these other ones, though, like if I went to 5-year, then it was giving me a 5-year profile. So it's a composite of all those years. Oh yeah, Apple. So Apple after earnings here. Apple, Amazon, Google all had earnings after the close. If you look here, just say at this chart, here's what it looked like after the close. It's probably hard to see. It had an initial drop to 162.5. Then it rallied, and right now it's at 171. So we're at 171. Now, if we relate this to the daily time frame, here's what I've been mentioning for a long while. As long as price remains above 165, I think we have more upside, at least sideways to upside. So we have this 165. That's been the level since basically the beginning of November, end of October. I believe that we are forming kind of an expanding range like this. And so, we have about 168, 169 as a zone here where it's kind of building out down here. And at some point, if it starts to work its way up, 172 is an easy target. And then perhaps it could start to make a move for 180 and get to the other side. So I think right now, 165 is kind of the gatekeeper. It's the main pivot. I think bulls are going to do everything they can to try and keep that bid and keep it within this box. And if you fail 165, it rotates to 157 with a shot at retrading 149. So I think right now this is a good little pullback. It's decent. One thing I will, since you asked about Apple here, yeah, you're right. It's already at 171, so it's already made the move. But I think that could extend around the range, because I think this is clearly, to me, this is the profile it's trading, and that's the behavior right there. So 168 was major resistance before, so since it's already 171, pulling back here is still the area to defend for a move higher. So that's the idea there. Now let me take you to this look over here. If you're in a trading room, then you've seen this look before, but this is my FANG layout right here, where I have a layout with Amazon, Google, Netflix, Facebook, Apple, and I have them ranked by strength here, basically, on which ones are the strongest. So I have them here as Amazon number 1, I had Google 2, Netflix 3, Facebook 4, and Apple 5. And this is a lagging 5, and this is a really strong top 3. And I was actually gonna put this one over here for a time, because this January has just been incredibly aggressive. And then if you look down here to the bottom right, this is a composite. So it's basically stitching these 5 together, averaging them to give you a composite trade. And so you can see Apple has been lagging significantly compared to the others. Amazon here with a little bit of a pullback, right to end the day. Same thing with Netflix. But all of these again, could offer a buy opportunity soon. Like if you look here, this is FANG as a composite. And what this is showing is quarterly VWAP and quarterly R3 and S3 bands. And so whenever something is trending up, like it is here, when price pulls back to VWAP, it's a strong buy usually. If you're in an uptrending market, a strong uptrend, it pulls back to VWAP, you buy it. If it's hugging R3, it's in a price discovery phase, but at some point it's going to give it up and return back to VWAP, and again, it's a buy. It's hugging R3, at some point it's going to give it up, boom, it's a buy. This one started again. VWAP was flat here, so there was nothing doing here. And then here it goes strong again up. First pullback, bought. And so right now we've been very, very strong to begin the year, obviously. Everything has. And we haven't pulled back right now to VWAP. It's right there. But maybe we might see that move. And if we do, it could be another big buying opportunity for another push higher. If you want to look at something to mirror, crude oil is the one. This is crude oil, and this is how we started the year so far in crude. You can see this is the daily chart of crude. It pops up. This is monthly VWAP, and it pops. And then price pulls back here, and this is when I mentioned 63s are where to buy. If price drops down to 63 or below, look to trap as a bull and look to return it to 65. And perhaps get it up to as high as 66.48. Well, when it started to come into that zone and was there, it was right on monthly VWAP. And again, it lended more strength to that move. A fantastic move. Yesterday, we were there again. We sat right on top of monthly VWAP. We held it for a time. We were sitting right at it. And again, another stellar move, trading 66 now. That's incredible to go from 63.67 to 66 in 2 short days off of a high probability bounce zone. Now, it's not always going to react to VWAP that way. It's most trending structures and those types of things. But even when it's not a super trend, I mean, look at this here. Boom, and just a great bounce. When that trade is there, you want to be on top of it. And again, that's something we're seeing here. We could see it happen in FANG again on some of these stocks. So there's the FANG group. And it's going to be interesting to see how these play out because they've been so strong. Good stuff overall. Here's the futures. Very nice. So that's a good look of them right now. I think, again, tech has been leading big time here recently, but all pullbacks are still welcome right now because these wide pullbacks, even as wide as this is, it sets the new normal. It sets the new normal. So, for example, right back here, Apple was going, bam, big, big drop. Everybody was scared, right? But what it did was it set a new normal, and then it took off. And then another big drop. Everybody's scared. It sets a new normal. Bang. Goes up here. Another big drop. I think it's setting another new normal, and it's going to do that again. 165 is big. It held there again. Rejection again below that area here this afternoon. I think overall, we continue to mark up unless this 165 gives up. So that's going to be the level to watch. Good question here. What is the price for a trial in your room? So if you look over here, you can go to Premium Trading Room, and when you click on that, at the very bottom there's 3 options, and so it's $99 a month normally here, just 99 bucks a month. Down here it's a $19 for a 2-week trial. Here's 99 bucks a month. But here's something that some of the traders didn't know or hadn't been there for a while. So if you've been in a room for a while and you've been paying 99 bucks a month, you could switch over to a $9.90 yearly and it actually gives you 2 months free. And so it actually averages out to $82.50 a month. $82.50 if you go the yearly route. Right now, most folks go to $99. Some folks go yearly, and then everyone goes on a trial here for 19 bucks. 19 bucks, not a whole lot of money, but again, it's enough skin in the game for you to have to pay something, and that makes you appreciate what you're getting and kind of makes you go through the content. Sometimes if something's free, folks don't really go through the content as much or take it as seriously, and there's a lot of great content in the room, a lot of great training, a lot of great resources, a lot of great traders in the room, and yeah, it's a good time. So that's the trading room. Again, Swing Trade Pro, the original's here. My book, Secrets of a Pivot Boss, is here. And the Secrets of a Pivot Boss Bootcamp, which is a training course that is designed to supplement the book, is here. You can click through those and read more about it. Swing Trade Pro 2.0 will be released here pretty soon. So if you're on the list, you'll be the first to know about it. Get on the list there. And if you want to rock some Pivot Boss merch here, this has been a fantastic seller. That next level Pivot Boss right there has been fantastic. It's such a great fit and quality, and it's 20-something bucks. Nice Pivot Boss shirt. So got a lot of good stuff for you here, and again, a lot of great candidates to look at today. We'll see how they play out heading into February, but should be very, very interesting. A lot of great movement here over recent months, and the expectation is that that will continue to be the case. All right, everyone. Well, I'm going to go ahead and leave it there for right now. Thank you so much for hanging out with me this afternoon for the February monthly market outlook. Always my pleasure. I'll get this put up on the playlist and recording list right away so that you have access to it as soon as possible. Everyone have a fantastic rest of your day, and I will see you all soon. Take care, folks.